Hey everyone, and thanks for jumping back into the cryptoverse. Today we're going to do a live stream. Bitcoin has broken 10K, and it did it fairly quickly. I think a lot of people weren't really expecting it. So I got a few requests that maybe I could jump on a live stream so that you guys could. Hey everyone, and thanks for jumping back into the cryptoverse. Today we're going to do a live stream. So let me see if I'm figuring this out. Let me know if you guys can hear me. I don't really do live streams that often, so just trying to get this figured out. But I think it's working. Okay, so let's see. I put together a lot of different slides to show you guys, so I want to go through those, and basically they're just updates from previous charts. So let's just systematically go through some of these so that we can get an idea of where we are in the grand scheme of the market cycle and put all the charts together. So this is a chart that I showed a while ago, and I showed it on May 25th. I haven't updated the numbers up here on the next chart, but on CoinMarketCap, the total valuation of the cryptocurrency market cap was 251 billion, and the trend line was 415 billion. And we said, okay, well, we were seeing an undervaluation still of negative 40%. And this undervaluation here, this is similar to what we've seen in the last market cycle. We were undervalued for basically all of 2015 and most of 2016 and even part of 2017. We were in this undervaluation phase, and we were in the overvaluation phase during, say, the last 3 quarters of 2017, and then for most of 2018 we were overvalued. Now, if you're curious how this logarithmic regression equation is set up, it's just 10 to the a times the ln of x minus b, where x is the number of days and a and b are fitted coefficients to minimize the sum of the logarithmic difference between the price and the fitted regression equation. So that's all it is. This can be updated on the fly, but anyways, this is the equation we get. Our red line is our fair valuation. So this is when we say, okay, well, if we're under the red line, then we are essentially undervalued. And if we're above it, then we're overvalued. If we're near the bottom green line, then it corresponds to around I think it's like a negative 60% undervaluation. When we are above the top green line, then it's essentially saying, all right, guys, the speculative bubble is in fact about to pop. And so, have your fun for the next few weeks, but it's not going to last very long. So I think this tool is useful for identifying, that, because otherwise it's hard to really know where you are. But again, even though we've moved up, I'm gonna toggle between this chart and the next one, and it'll show you the difference between May 25th and then today. So you can see that it's barely anything. I'm just going back and forth. If you look at that last few data points, not much is changing. But despite that, not much has changed. We're still experiencing a huge increase in the valuation of a lot of different cryptocurrencies, including coins like Ethereum, Cardano, Chainlink. A lot of the other ones are also going up quite significantly right now. So despite all of that, the valuation has barely changed, and it gives you, I think it helps give you an appreciation for how much further we could be moving up over the coming years. So if you guys follow this channel, we do talk about 2023 being our target date. So don't be surprised again if we maybe we don't shoot up immediately, but we could continue going up, but still stay undervalued for another year potentially or more. Notice that in 2019 we were undervalued, and then we bubbled to being overvalued for a short period of time, but we ultimately came right back down. And if we were to repeat the last cycle, then we might expect to be in this undervaluation phase for the next year, even though we could still be going up. And again, I just wanted to show this. I know people, this is just the difference between the price and the logarithmic regression line. So it just shows you, basically the overvaluation that we get to, and then so essentially when we're 40% or negative 60% of the trend line, this is when you want to historically be getting into the market. So this helps identify those times when it occurs. Also, if you guys would, please subscribe to the channel, leave the video a thumbs up so I can get a little bit more publicity here. I'm trying to grow the channel. I'm pretty happy that we recently got to 20,000 subscribers. There's a rumor going around that Bitcoin cannot, or the price of Bitcoin is capped by the number of subscribers that I have. So if you want to see Bitcoin go to 100,000, then please subscribe to the channel so we can see that. So yeah, go ahead and like the video, share the video, and hopefully we'll see the number of subscribers move up. And so, okay, so again, this is our fair valuation line, and I should let people who are tuning in who have not seen this channel before, we focus more on data science models. I'm not here to just pressure you into, say, buying a specific coin. None of the coins that I talk about, I've not been paid for any of it. The main goal is to use my background, which is my undergrad was in mathematics, and then I have a master's and a PhD in engineering. So I try to use my background and apply it to the cryptocurrency markets because I find them really fascinating, so that you guys can use this information to potentially maximize your portfolios. I mean, this is not financial advice, but I just show these longer term macro models so that you can slowly move in and out of the market. You don't have to worry about the stresses of day trading. In fact, if you're day trading, you're probably losing money anyways. I'm sure there's going to be a few of you that'll chime in on that. But for the most part, day trading is not for most people. In fact, buying when the market is down and then just biding your time and selling when it goes up, according to, say, the fair valuation versus the trend line, I think this makes a lot more sense, and it's a lot less stressful. It's just more systematic. So again, this is kind of like our buy region, and we've been showing this chart for a long time. This is essentially our buy region. Let's see. I'm just looking at some of the questions in the chat. All right, so okay, and then the red rectangle here is essentially our sell region. So we're looking to be overvalued by about 300 or 400% by the next market cycle, which would then put us at around a $10 trillion market cap, because you can see that our fair valuation would be a few trillion. So plus 10 trillion plus or minus a few trillion. What's a few trillion among friends, as we like to say on the channel. So this is more or less what I would foresee happening. Now, one of the things we want to talk about is with the price of Bitcoin, and I've been saying it for weeks. There have been so many people saying that Bitcoin has to go back down to $1,800, or throwing out hyperwave theory, saying that we gotta fill the gap at 3,500. I think a lot of this stuff is just complete noise and irrelevant. And even if it is true, I don't think it's smart to necessarily bank your entire future potential ROI on just a few voices that you might see on Twitter. And in fact, I've been seeing a lot of people on Twitter, saying they're shorting, and then throwing out these shorting tweets constantly and saying, okay, we're going to 91, we're going to 88. So these are just noise. No one knows where the price is going in the short term. As many of you have known, I've been fairly bullish for a while now. Every step of the way, we said if we get above the 20-week moving average, this is when Bitcoin tends to shine. You can expect things to move quickly. You can expect the rest of the cryptocurrency market cap to move quickly. So this is pretty much par for the course. So this chart here is just the price of Bitcoin and time, and this is our primary logarithmic regression equation that's fitted to non-bubble data. So This allows us to hopefully identify the best times, historically speaking, to enter the market and then to project that out. It was fitted up to data points in this region. It has not been fit further than that, but it seems to have done a good job at predicting more or less the bottom here. And we're still, essentially just above the middle line. And the middle line, the primary regression line now, it does not always correspond to the 20-week moving average, obviously, but right now it does. So right now the 20-week moving average is that primary regression line. And then the lower bound region actually somewhat corresponds to $6,000 or so, which, as many of you probably know, is the 200-week moving average. So keep this in mind. Don't be surprised, and I've mentioned this before on the channel. Don't be surprised if our future market cycle looks something like this. It's possible that we see a repeat of 2019, where we go above our regression bands, okay, and then maybe we come back down into it. But potentially, if we do come back down into it, maybe our support is at 10K, and you can see that the regression band obviously moves up monotonically, so it does not decrease. So as long as time is on our side, as long as we keep we're just moving to the right, this is going to hopefully continue to go up based on our historical patterns. But in the meantime, don't be surprised if you see these smaller term speculative bubbles pop up. So be prepared for it if that does happen. Because it happened in 2019. A lot of people weren't ready for it. They said, okay, Bitcoin's going to 100,000 this year. But it's pretty preposterous to have thought that, as I mentioned on the channel. So just stay level-headed. Again, we're not here to tell you, things that don't make sense, especially mathematically. We're just using our models to try to better identify where we think the market's headed. And again, I think this is one of the charts that people tended to like. And I see people talking in the chat. We're going to talk about some of the other coins. I'm going to pull up TradingView in a few minutes so that we can look at some of that. I just wanted to go through some of these charts first so that you guys could at least be updated on these charts and where we stand. So I would appreciate just a little bit more patience until I get to that point where I can show you guys that. And I would like to mention that if you want, you can join my Telegram group. I'll go ahead and put it in the chat. It's the public Telegram group. So go ahead and check that out if you want to join. I think we're getting close to 3,500 members. So go check that out if you guys like talking about crypto and want to keep just talking with people. We have a lot of different people in the chat from all walks of life. I mean, we have especially within the crypto space, a lot of different coins represented there. So go check it out. So if we look at our, I really like this chart because it shows our average price, our minimum, and our maximum of Bitcoin every single year. So it's granulated annually. So it helps reduce out the noise. And we've shown this chart before, and it helps us to identify our expansion phases and our contraction phases. And notice that our contraction phases are getting longer. So the first contraction phase, annually speaking, was 1 year. The second one, it was 2 years. Or you could even consider this to be, this was over the span of 1 year. This was over the span of 2. And the projection we put out a while ago was, okay, well, our next contraction phase is likely 3 years. And so far, it seems to be the case. And bear in mind that for 2020, we haven't fully printed what our final, our final average price, our minimum, and our maximum. We won't know that until the end of the year. But this is where we currently stand, and I ultimately think that going into 2021, 2022, and 2023 will be our expansion years. So be on the lookout for this. The prices I would expect in the coming years to really start to move up. So again, I think 2019, 2020, and the beginning of 2021 are our accumulation year. So don't squander the opportunity. Again, this is not financial advice, but I would say if you're looking at the macro scale, it seems like over the next several years, Bitcoin There's good things ahead for Bitcoin. Clearly, we have the economy is not doing so well, but I would say by 2023, I would still expect a speculative bubble to occur. And this chart here, it shows our primary regression band, and then it also shows our sell region. So this is our logarithmic regression equation fitted to the sell regions at each speculative bubble peak, and you can see that they're more or less converging. And this is in line with the fact that we've seen that annualized volatility is decreasing over the macro scale. And then finally, this is one of the first charts I made for Bitcoin. I don't really talk about it a whole lot, but it's just a lot of regression bands to try to show you that, by the way these regression bands are drawn, obviously you could draw them many different ways, but we tend to drop down 2.5 log lines each cycle. And if we were to drop down another 2.5, so we're at the red, so going down to the blue, the green, and halfway between the purple and the green in 2023 would put us out here between $100,000 to $200,000. So this is ultimately where I see things headed. So let's pull up TradingView, because I know some of you are going to want to see that. Remember, if you guys do want to, you can also join the premium list. We do have a premium list. You'll get access to a lot of different things, including a weekly newsletter, a weekly premium video, and a Google Sheets dashboard where you can follow the live risk levels of Bitcoin, Ethereum, Cardano, and a few other coins. So if you want to check that out, again, go to the website, intothecryptoverse.com. I'll put it in the side chat over there. You can always check it out for a month and see how you like it, but a lot of people do tend to like it. We have a lot of people signed up, and I'm basically every single week we have a different newsletter, and there's a special topic on the newsletter that I try to listen to what you guys want, and then I try to analyze it. For instance, recently we were talking about the best day to purchase Bitcoin, the best day to purchase Ethereum, and also the best hour of the day to purchase Bitcoin and Ethereum. So things like that. So I'll go ahead and put that in the side chat, and then we can keep moving on. So here's the chart of Bitcoin, and again, we've been following this chart for quite a while, and we said, each step of the way, we were, I publish videos every few days on Bitcoin, and we've been here every step of the way. Each bar here represents a week. And so when you look at the weekly time frame, it helps to reduce the noise. There's no reason to pull up, the minute time frame and stress yourself out over it. But again, I'm sure many of you guys are aware about everyone drawing this trend line, and they've been drawing it for a while, basically saying that's the trend line. You can see that according to that trend line, we've broken out, and this is how a lot of people draw it. Now that we have broken out, I would anticipate people redrawing it to encompass this wick, so that they can push the same narrative that we still have not broken out. So be looking for that. I imagine you'll see that. Clearly, again, just as when the line was drawn here, and then later shifted to here, and then now probably will be shifted even higher. Remember that we've always broken out at some point in the past, each market cycle, so don't be surprised if this is the time. And again, I tell people that are just waiting on the sidelines, who have been waiting on the sidelines since, say, $3,800, and they've been waiting for an $1,800 Bitcoin. It seems really weird to me. You already would have seen like a 3x almost on ROI, and just simply waiting for some ridiculously low number just seems hard to imagine. It's hard to imagine the price coming all the way down to this region. But again, we know anything's possible. So we are above the 20-week moving average. This is the blue line. We're also above the 50-week moving average, which is the yellow line. And I'll try to get to some of the questions in a minute, because I know there are a lot of questions in the chat, so we'll try to get to those in a little bit. So one of the things that most people were probably not expecting today to happen was to see this, to see a $10,000 Bitcoin today. We just shot through the $10,000 region, in like a few minutes. Happened really quickly. And again, there were a lot of people saying that 9,500 was the local top. Again, Bitcoin has proven them wrong. So the next area that people are likely going to talk about is 10.5, because that was our primary resistance during this last move. So again, be on the lookout for 10.5. Again, if we get above 10.5, then maybe we head off to 14K this summer, like we did last summer. And in fact, last summer when we hit 14K, it was in June. It would be about 3 to 4 weeks from now if it were kind of like a mirror to hitting 14K, like we did last summer. So, these short-term stuff, completely irrelevant. Look at dynamically entering the market. We do cover that on the premium list, but look at least entering the market based on some other metric than what you see on Twitter and what your emotions are telling you. I think this is very important to consider. So a few other things I wanted to show you. This is the daily chart. I don't pull up the daily chart that often, but you can see that we did have, let me go ahead and show you guys let me put the 200-day on here, and then we'll hide the 100-day. So this was the golden cross. We covered the golden cross. We said, okay, well, a lot of times when we have golden crosses in the short term, we go down. And we did go down in the short term. This was something we said, this could happen. It's happened, if you go back in time, it's happened a lot before, where you see golden crosses. And even when you see death crosses, sometimes the price goes up, but the general trend stays down. So over here, we have the golden cross. We saw a move down to begin with, but we've continued our general uptrend. And this, again, is one of the prerequisites we need to be in a bull market. We need the golden cross. We also need to be above the 20-week moving average and holding it as support. You need to watch out for this. When things get moving with Bitcoin, I've been here for a long time. I first got interested in Bitcoin in 2011 when I was an undergrad and I took a cryptography mathematics course. So I've seen the markets for a long time. When it gets moving, that dumb money sitting on the sidelines waiting for $1,800 Bitcoin, we need those people. So, thank those people when you see them, because those people will be the people to help fuel the bull market. When you and I are no longer buying Bitcoin because the risk is too high, it's at say $12,000, $13,000, $14,000, $15,000, and we're like, okay, we bought plenty of Bitcoin when it was $3,000, $4,000, $5,000. There's no need to keep buying it at $15,000. I don't want my exposure to be that high. These are the people that then come in. They wait for their phantom price target to be hit, and then they help fuel the bull market. Because when you're no longer buying, those are the people coming in and pushing the market higher and higher. And you're already enjoying a nice ROI, especially if you invested down here. If you invested, say, near the very bottom, or let's just go to the candle here on the daily, you're already up 100%. And if you invested at 3,800, which is where we bottomed at, then it would have been down here, and you'd already be up 165%. So if for people just completely waiting on the sidelines, this is a significant move. And each cycle, you kind of see the same thing. There's always that window where the price keeps going up, or it starts to move up, and everyone's just in disbelief. And they say, you know what, it's a fool's rally, and then this happens, it comes down. And they say, see, I told you so, we're going straight back down to 3,800, and then it doesn't happen. It keeps moving up, and then they say, okay, I'm sure I'll be right. And then they say, okay, look, we got rejected by the 50-day. I told you it's a fool's rally. And then we go down, and then we keep going up. And then they start to get into this disbelief phase where then you get to this multi-year trend line that everyone loves drawing, and you say, okay, well, this has to hold as resistance. But it doesn't. And I'm not saying that we're going to necessarily go up in the short term, but the three main conditions I would consider for a bull market would be being above the 20-week and holding it as support, which we're above it. We need to prove that we're going to hold it as support, and when that time comes, we'll need to hold the line. The second one is the golden cross, and the third one is just the sheer disbelief of all the bears in the market that how could we be breaking a multi-year trend line this easily. So be on the lookout for this. Clearly we're already above where a lot of the bears never thought we would make it. We're sitting pretty above 10K. It's possible we come back down, but again, these are, say, necessary but not sufficient conditions that we need to fulfill. So keep this in mind. Ethereum, we cover Ethereum extensively on the channel. We said right? We said that when Bitcoin gets above the 20-week moving average, we would expect Ethereum to start performing. And you can see that it has. We've started moving up the Ethereum Bitcoin ratio. This is what we expect. And one thing I was looking at that I was just toying around with, I looked at the monthly candles on Ethereum Bitcoin. And it's interesting because it does seem to have played some role here. You can see sort of a support region here back in 2017. And this ultimately led to the final move that Ethereum had before it really crashed. We came back down to that 20-month moving average, came back up, and then once we broke it, it was just down and down and down. Now we're coming back up to the 20-month moving average, and we're basically pressing up against it. And it's interesting because you can see that essentially every wick, each candle, every wick has been going up to the 20-month moving average. I know we don't really talk about monthly moving averages, but I think a lot of people who watch this channel can at least appreciate that longer term perspectives are a lot more important than, say, days or hours or the 4-hour or the minute chart. But if you look at this chart, it's interesting because you can see each wick goes directly to the 20-month moving average. So this one does back in February, this one does back in March, this one does basically in April, the one in May also went to it, and then the one in June has already gone to it. So what I would hope for would be to see a monthly candle printing above this, and then Ethereum really could get moving. I think as long as Bitcoin stays above the 20-week, and especially the 20-week and the 50-week, then Ethereum is more and more likely to shine in the short term. So personally, for me, I'm dynamically DCAing a move into Ethereum every single week because I feel like as every week goes by, more and more confidence will be built up for Ethereum. Now again, I do have a hedge against Ethereum. It is Cardano, so we follow Cardano on the channel as well. I don't have any charts pulled up for that right now. I know that Cardano gets a lot of hate, but it's my channel and it's my hedge, so we do talk about it. And actually Cardano is up pretty significantly the last few weeks, I think like 200% or something. Here's the Ethereum USD chart. We're really starting to move up. We've moved from all the way down at the wick at $90 up to $240, and it was just a couple weeks ago when we were at 200, or maybe just like a week ago, that I said, the only thing standing in Ethereum's way to get to go from 200 to 300, the only thing really is Bitcoin just staying where it is. If Bitcoin can just stay at 9,500 or move up, then Ethereum is going to move up as well. And it has. It's moved up 25% since that happened. And a lot of that move, I would say maybe 15 to 20% of that move happened before Bitcoin broke 10K. So it was essentially saying, okay, well, if Bitcoin can just stay above the 20-week and the 50-week, but primarily the 20-week, then we would expect this move from Ethereum, the move from 200 to 300. And we're already halfway to 300. So as long as Bitcoin is staying bullish, as long as it's above the 20-week and also the 50-week, and even more so if it stays above 10K, then I think there's a lot of good things in store for Ethereum in the short term. So obviously we'll continue to follow Ethereum on the channel. Go ahead and if you guys want, go ahead and leave some questions in the chat over there, and I will try to start answering them. I also wanted to again remind you that if you want to talk about these charts, then please check out my Telegram channel. It is a public Telegram channel. We have almost 3,500 people. So go ahead and check that out. I just put it in the side chat. If you want to check that out, you can just join, and you'll find me there quite frequently. So if you guys want to talk when I'm not doing a live stream, you can find me on my Telegram channel usually. So what questions do you guys have for me? I guess I can scroll up the chat and see. So someone said, do we have more time to buy? So for me personally, with Bitcoin, I purchase it dynamically speaking based on the risk. So when the risk goes down, I purchase more of it. When the risk goes up, I purchase less of it. And right now, the risk is getting higher. The risk is something that I publish on the premium list. And again, you can check that out at intothecryptoverse.com. I'll just put it in the side chat again. But I mean, just to give you a general idea, you can create your own risk metric. You can base it on whatever you want, as long as you think it's valid, and try to assign some numerical value to it so that you can rely on that rather than your emotions. So for me personally, I'm purchasing Bitcoin up to around $13,000. Once we get above 13,000, I won't be purchasing it anymore. I probably will start selling it, but I'll sell it dynamically. I'm not going to sell my entire position. I would sell a small portion of it. To be precise, I would sell 1/15 of it. So for me personally, I'm still buying Bitcoin even today, but the amount of Bitcoin that I'm buying today pales in comparison to the amount I was purchasing earlier in 2020. The key is to always have capital on the sidelines so that you can take advantage of a drop in the short term, and exactly like we saw in March. This is like the poster child for why you should have capital on the sideline. When you see something like what happened in March happen, you then realize, okay, it's good to have money on the sideline so that I can reduce my weighted risk in the event of a short-term drop. I guess I should pull up the Bitcoin chart since the title is Bitcoin broke 10K. All right, so let's see what other questions we have. Let's see. Someone said, when do you see us retesting the 20-week moving average again? Sometime soon or much further into the future? It's really hard to predict short-term moves. I think there's a good chance that, I don't put any credence on my own personal opinion. One of the things you learn when you get a PhD in a field is when you first start learning something, you feel like you don't know anything, and then you take a few classes and then you feel like you're an expert, and then you take a few more classes and you realize you're not really an expert and there's a lot to learn, and then you get to the point where you've taken 4 or 5 years of graduate classes, and you get to the point where you realize there's so much out there that you still just don't know so much, and it's just it's hard to feel like an expert when it's like the more you know, the more you realize you don't know. And in terms of Bitcoin, the only thing that I put any credence in is the macroscopic picture, not the short-term picture. I personally have my own guesses as to what I think would happen, but again, these guesses are nothing more than guesses, and I don't operate on the guesses. I just operate on whatever the risk is according to that metric, and that's all it is. I don't put credence into what I think will happen. What I do think, if I were to say what I think, and I've been mentioning it for a while, I mean, as long as the 20-week, as long as the 50-week is holding, I think we're pretty good to go for a little while. And I could see this. I could see the price of Bitcoin continuing to move up this summer. In fact, I mean, like if I were to guess, I would say there's a higher probability that Bitcoin moves up than moves down. And I actually just published a video yesterday where I said, okay, we're at a crossroads. We're probably not going to stay at 9,500 much longer. We're either going to go up and maybe make our way to 14K, or we're going to start to go down and maybe go back down to the 200-week moving average at around $6,000. So these were the two main directions I could see us going. But again, we are breaking to the upside, and I certainly am leaning more bullish. But again, I have been wrong before on short-term predictions. I certainly, back in February, or back in March, I should say, I certainly did not expect the price of Bitcoin to go from like 8,000 to 3,800 in a single day. I did not expect that, and therefore it's like a case in point as to why short-term predictions are often just ridiculous, because it's really hard to project what Bitcoin is going to do. What's more useful again, is looking at macroscopic charts like this, where you can identify just general times to be moving into the market and general times to be moving out of the market. This is the key. I wouldn't worry about what happens on the day-to-day. And remember, if you look at the chart of Bitcoin, things get a lot clearer when you just say remove the price. So if you don't look at price and you just say look at something like the 50-week moving average, things get so much cleaner to look at. And so this is, and let's actually pull that up. Let me pull it up on the BLX because I think it's worth showing. So the BLX goes back like 10 years or something ridiculous like that. So let's go ahead and show that. So here is the BLX, and we're going to remove price. We're going to remove the 20-week, and we're looking at the monthly chart. Let's change it to the weekly. And we're going to zoom out. Sorry, I went back to the monthly. So anyways, if you just look at the weekly chart, I think it helps you get a better appreciation of what the price is generally doing. And you don't get really bogged down by all the day-to-day stuff. You can see that it typically goes up, and then it goes down before the halving, and then it starts moving up. It goes up, it peaks, and then we start moving down before the halving. It goes up into the halving, and then we peak. One of the things we've talked about on this channel is the evidence of lengthening cycles. So, this peak, and notice this is the moving average, not the actual price. This peak occurred, let's actually take a measured move instead of me just guessing here. This peak occurred 693 days after the halving, whereas this peak occurred 833 days or so after the halving. So I would expect the next peak to occur, maybe like 1,000 or 1,200 days after the halving. And so if it were 1,000 days or say 1,200 days, that would essentially put us, 3 years from now or so. So remember, the macro picture the macro scale is your friend. It could be, it could very easily be months before we test the 20-week. I don't really know. It could be tomorrow, it could be months, but ultimately, I think it's somewhat irrelevant. Let's see, what other questions do we have? Someone said, so Colin James said, hey, if you have a pool of funds available, how would you choose your DCA amounts to buy into the market? Say you had 300,000, how would you determine your X? So this is a good question. I think it depends on how quickly you want to get into the market. One thing you could do is, if your X is, let's say you have 300,000, let's say you have $100,000 and you want to slowly move it into the market. You could calculate. It also depends on how frequently you're putting it into the market, whether it's say daily or weekly or monthly. So one of the ways you can think about this is how soon would you want to get that money into the market? And if your answer is, I want to get the money into the market in a year, then what you could do is calculate, okay, well, if I'm putting in this amount monthly at the highest risk level that I would be okay purchasing at, then it would take, how long would it take essentially? So for $100,000, then your X, if you wanted to get that $100,000 into the market within a year, then your base X, if you're doing it monthly, could just be 100 divided by 12. And then if there's a month where it goes, the risk drops to between 0.3 and 0.4, then you could do 2X. So then you're ultimately going to get all your money into the market sooner. But by setting, say, like your X such that that as long as the risk stays between, say, 0.4 and 0.5, then you're going to get into the market, then that's fine. If you want to purchase to a risk level of say 0.6, which is a lot higher, the price point corresponding to that risk level would be a lot higher than 0.5. Again, 0.5 is around 13K, as I've mentioned in a lot of videos, but this value changes dynamically. A year from now, the risk at 0.5 will not be $13,000 most likely. It'll likely be higher. But so say if you wanted to purchase up to 0.6, then you could calculate your X, but then note that currently, maybe you'd be putting in 2X. It depends on how quickly you want to get into the market. And the whole like FOMO thing is you need to step away from that, because if the idea is I have a ton of money, I just want to throw it into the market, remember, you need risk management is important, and it's not often talked about in the crypto space. And I think it's just something you have to consider, because as while many people think that Bitcoin's going to go to 100,000 in 2020, a lot of people think it's going to go to like 200,000 at the end of 2021, which I wholeheartedly disagree with. But I think between 1 to 200,000 by 2023, mid 2023 or so. Again, you don't want to bet like a ton of money on something if you can't afford to lose it. Remember, this is a risky market. Don't invest more than you can afford to lose, because ultimately no one knows what's going to happen. I can make as many models as I want, but ultimately at the end of the day, if the price of Bitcoin doesn't have to follow these models, I use the models to inform my own decisions, but you don't want to use it excessively to the point where you're just over leveraged out of your eyes, and if the price were to go down, then this completely ruins your investment. This is not a good thing. So I would say just be smart about it. Pick what time frame you want to get into the market. If you see a dip in the short term, capitalize on it, and if not, then you could continue to move in every single month or every single week, as long as the risk stays at a level that you're okay with. So let's see, what else do we have? Leave the questions in the chat if you guys have any. And another thing too with people who like to day trade, remember that if you lose say like a Bitcoin day trading, maybe you think, oh well, it's only $10,000, but I mean 3 years from now that could be worth $150,000. So you have to consider the opportunity cost there. Okay, so do we have any other questions? Yeah, and one of the things I did want to talk about in terms of, it's not often talked about, right? But taxes. So one of the reasons why I think it's useful to follow things like the risk metric, or to have an idea of when the next speculative bubble might be, if the next one is in say the middle of 2023, and I mean, let's say you live in the United States and you want to avoid short-term capital gains, right? Like if you want to avoid short-term capital gains tax, then you probably want to stop buying Bitcoin maybe by mid 2021 to late 2021. I think the earliest that Bitcoin could have its speculative bubble would be the very end of 2022. I don't really think it's going to happen then, but I think it's a possibility. So I would certainly say you would probably want to stop buying before that, so that everything when you're selling, it's being taxed as long-term capital gains, and you don't even have to mess with short-term capital gains. So this is something you really should consider, because taxes can really kill you. And this is why I say, there's no need to hold 50 different altcoins that you're trading daily, especially if you can just hold a few and just pick the ones you really believe in, that you think are going to make a lot of headway this market cycle, and just stick with them, and then wait for the moves to come to you, rather than chasing the moves once you see them occur. All right, do we have any other questions? looks like Bitcoin is still holding 10,000 for now. We'll see. We'll see again when the weekly candle prints at the end of the week. We'll have a lot more information. Whether we're going to continue this, or at least like what's going on in the short term. Someone said, "Do you think Ethereum will drop soon?" I mean, as long as Bitcoin is doing its thing and staying bullish, especially above the 50-week moving average, which is around 8,800, I don't think Ethereum is going to significantly drop. I mean, maybe it goes back to 200 if Bitcoin goes back to 8,800 or 8,300. But as long as Bitcoin's above the 20-week, I don't think it's going to be dropping back down to like less than $100 or anything. So someone said, what's your crypto value versus other? So that's a good question. So one of the things that I talk about on the channel, and I want to prepare you guys for it, is now the channel is primarily focused on cryptocurrency and Bitcoin, Ethereum, and a few others. But again, the reason for this focus is because I think the next few years are going to be very lucrative for crypto. Over the macro scale. Again, short term is irrelevant, but I think this is the case. So, but remember, if lengthening cycle theory is true, and we see a speculative bubble in, say, the middle of 2023, and then we see a bear market, you don't want to be in cryptocurrency during this time. I mean, if you're shorting the market, you can do that. But if you're just wanting to put money into the market and try to watch it grow, then don't, a lot of you have lived through the pains of the bear market, right? I mean, once you've lived through one, you really don't want to live through another. So use that experience to say, okay, well, I'm going to use this market cycle as a way to get ahead. Okay, like I'm gonna look forward through the next 3 years, and I'm going to try to get ahead in my investments. Okay, and once I get to that point, I'm going to dynamically move out of the market. When that happens, you don't just want to put your money on the sidelines and just let it sit, because it is going to lose value. This is why you'll see me sometimes talk about other asset classes. Like, we do have a risk metric for the S&P 500, which we talk about, and I actually talked about yesterday in the premium video. I do have premium videos on the YouTube channel if you check out the premium list, which you can find in the description below at intothecryptoverse.com. But I do talk about the S&P 500. The risk, I published a video on the S&P 500 back in March, and the risk was 0.29. And I said, okay, I mean, historically speaking, this is when you want to buy. And this is also when a lot of people were saying, no, I mean, it's going to keep going down. But no, look at the risk. Don't look at your emotions. Don't let your emotions influence your decisions. So, you're going to see sporadic videos to other asset classes like stocks, maybe some precious metals, because we're going to cover those throughout this market cycle to some degree. But then when we get to the peak of the speculative bubble, and then we say get out of the market, who wants to watch videos on cryptocurrency for, say, 3 years if the market's just going down? I mean, I don't want to make them then, and I doubt many people are going to want to watch them then. So this is when we would take the fact that, okay, we were able to use the cryptocurrency asset class to get ahead, and then we're going to diversify the ROI we've seen here into other assets. Now, for me personally, cryptocurrency is around 10 to 15% of my portfolio. And I know a lot of people have theirs much higher than that, but I think it's, if Bitcoin goes by down 50% in a day, then it's pretty catastrophic if your entire net worth is going down by 50% in one day. So let's see, what other, let me scroll up, because I think I missed some questions. So, okay, here's a good question. I'll try to go through, because I know I've missed a lot of questions, but here's a good question by Kevin Sandu. He says, a lot of us here believe in your lengthening cycle model, but can we hear what signals you would want to see that conclusively invalidate it in 2020 to 2021, and what plan B would be to cash out. Well, I'm not sure if you're talking about plan B in terms of the person who publishes stock to flow, but in terms of invalidating the lengthening cycle theory, then what we would need to see, so we're going to go to another website here. So you can go to intothecryptocharts.com. So we're going to take a look at this website. This is has the non-bubble logarithmic regression stuff that I made. So what we would be looking for to get to say that, okay, so first of all, let me clarify. I do not think the four-year cycle theory is a thing. I think it's not a thing at all. I think it's made up in a lot of people's minds, and that's what people want it to be. I don't think the four-year cycle theory is a thing. But with that said, what would have to happen where, you know, we might say, okay, well, maybe it is a thing? What would have to happen? Well, what would need to happen is, you know, I would say by the end of 2020 or the beginning of 2021, Bitcoin needs to be at $20,000, and it needs to be sustained at $20,000. So if you see Bitcoin go to $20,000 in, say, the next 6 months, and not just go there, I mean, maybe it goes there and then gets rejected down hard back to, say, 14K. But if we get to 20K and then can stay above it and then start moving sideways or even continue to slowly move up, then this is when I could say, okay, maybe there's some validity to the cycle being shorter than what I think. But one of the reasons why I don't think that's the case is because, I mean, according to this regression band, and as well as, I mean, there's the pinned video on my channel is the evidence of four-year or the evidence of lengthening cycles. You know, if you look, the prior all-time high was around $1,100. We crossed $1,100 while we were in the regression band, and it happened, you know, like many years later. You can see that we were in the regression band when we crossed it, and once we crossed that $1,100 point, this is when we broke out. Okay? So looking at the current cycle, where let's say the peak is around 20K, if you move sideways, that puts us here. It puts us at the beginning of 2022. So if this were to repeat in the same manner and respecting the primary regression band, then we would get to a sustainable $20,000 by the end of 2021 or the beginning of 2022. So what I would anticipate would be to see us, you know, maybe we come up here in the short term, we come back down, we continue to ride this regression band up, we get to 20K by the end or by the beginning of 2022. We slowly move up by the end of 2022, maybe Bitcoin's at 50K, and then throughout the first couple of quarters of 2023, maybe even as late as the third quarter, we see a move to, say, like $100,000 to $200,000 per Bitcoin, and even that could happen as late as 2024. And then I think the next bear market will be helped curbed by the next halving, because they're going to start bleeding into one another. Therefore, the next cycle, maybe this one, but more than likely the next one will be we'll have two halvings within a single cycle. So to answer your question, what would need to happen for the four-year cycle theory to have some merit and to potentially say, okay, maybe it is a thing? We would need, and again, I don't think that's the case. I need to reiterate, I don't think the four-year cycle theory is the case. But if it were, then again, we would need to see a $20,000 Bitcoin and a sustained $20,000 Bitcoin probably within the next 6 months or so. I hope that answers your question, Kevin. Okay, let's see what other questions we have. So, I mean, there's a ton of questions. So, I mean, feel free to put them in the chat more than once if I miss it, because there's a lot. Let's see. Some of them are pretty funny. Yeah, I know there's a lot more questions if I scroll up. Someone said, okay, they just subscribed. Ramen Monkey, so thank you for subscribing to the premium list. Do you plan on covering Kyber anytime? It wasn't really on my list So I do, one of the nice things about the premium list, the reason I have it is to help, so that I can talk more candidly to people than I do on the public channel, because it's, the public channel is more outward facing, and everyone's watching it, or I don't want to say everyone, because with regards to a lot of crypto YouTubers, I'm just a small like a small fly or something. But again, if you would please subscribe to the channel so I can help catch these other guys. But I don't think one of the nice things about having the premium list is there's about 300 people on it, and I can communicate with these people in a way that's more candid than I would on my own public channel, because I can say, okay, this is what I'm thinking, without it being put under the scrutiny of the entire world. And while some of you maybe don't understand that, for me it's kind of nice to just tell these people what I'm thinking in the short term, and even in the long term with different projects. I mean, even today someone was asking about a coin that I don't typically cover, but I did take the time to give them my thoughts on it. So I always say, if there's enough interest in something, I'll take a look at it. If there's enough interest of the people that are on the premium list, then I'll probably take a look at it. And so on the premium list, there's a feature request tab, and I'm probably going to change the way that I have this so that I can gauge better the interest in a certain topic. But if I start to see that a lot of people are interested in something specific, then I'll try to cover that. And again, the last few weeks, the premium reports were mainly focused on the best day of the week to buy Bitcoin and Ethereum, and the best hour of the day to buy Bitcoin and Ethereum. And I can tell you that while that analysis is over the macro scale, and while it necessarily doesn't mean anything in the short term, it actually has been very useful in the short term. So I would encourage you to check it out. And again, if you want to, you can pay for 6 or 12 months to get a discount with crypto. So that'll answer your question. So look out for that. Just put it in the feature request tab on the Google Sheets document. So there's a Google Sheets dashboard for the premium list, so put it there. All right, let me look at the other questions. So someone says, Goldving says, okay, if you held 0 Bitcoin today, what would your strategy be? So this is an interesting question, because I certainly don't hold 0 Bitcoin today. I've been buying it fairly aggressively, but the question is, okay, if I did, let's say I just come into the market, then I probably would try to get some money into the market, just get some exposure, because I do think there's a risk associated with not holding Bitcoin. A lot of people talk about the risk associated with holding it, but there's a risk of not holding it as well. So if I didn't hold any, I might put in a small amount, or a lump sum, if you will, but I would also leave myself room to continue to dynamically DCA moving forward. So I wouldn't just put in everything, because there's always a chance that Bitcoin drops to $6,000 next month. I mean, we don't really know where it's going to go, and if you put in all your money at once and don't have capital to capitalize on a short-term drop, then that's also a risk. So it's all about managing your risk, and then just not stressing about it, just saying you're sticking to the plan, and if you stick to the plan for years and years and years, it tends to work out. Someone said, so Richie says, what are your portfolio investment percentage? So I really don't share that. I mean, the one thing that I've mainly shared is that Bitcoin is, or it has been, it is, and it always will be the majority of my portfolio. So that's what I'll say. I don't usually break it down beyond that, just for the general public channel. Okay, let's see what else we have. Sorry if I get silent for a couple seconds. I'm just trying to read through all the questions. And again, if you guys would, please go ahead and give the video a thumbs up and share it. I see 4 of you have given it a thumbs down. That's okay too. I think it helps it in the algorithm as well. So thank you for contributing. So someone said, which alts do you plan to cover? So, okay, so what's his name? So Vittorio Pichoni says, which alts do you plan to cover in the future besides Link and ADA? So, it's a good question. I mean, there's a few others that I'll likely cover. I think probably one of the ones that I would like to cover at some point soon would be Monero. Just 'cause, I mean, it's a privacy coin. One of the things I'm just not so sure about with privacy coins is in terms of government regulation, there could be some issues there. But again, if you're talking about, say, diversifying your portfolio to cover, say, smart contracts like Ethereum and Cardano, and then you're also covering maybe things like privacy or things like Chainlink, which we have the Oracle, and you're connecting real world data to the blockchain. If you want to and I was thinking about making a video on this in the coming weeks. Let me know in the comments if you guys think it would be useful. But I was going to make a video on, say, like a portfolio, how you can diversify your portfolio within the cryptocurrency asset class. So I mean, I primarily hold Bitcoin, and then clearly Ethereum's my number 2, with ADA and Chainlink as well in my portfolio. But again, there are a few other coins that I have that I guess I should say I have them when Bitcoin's above the 20-week. When we're below the 20-week, I completely consolidate out of them into Bitcoin and or stablecoins. So you have to keep that in mind. But I do hold them now. And then also, there are 2 or 3 coins that I don't hold now, but I would probably purchase once Bitcoin gets to 20,000. When Bitcoin gets to its previous all-time high, there's likely a few coins that I would purchase in that event. So I was thinking about making a video that talks about, okay, how you can diversify your cryptocurrency portfolio. You would have Bitcoin, obviously, then you'd have smart contracts like Ethereum and Cardano, and maybe even XTZ if you really want to be diversified there, and then you could weight it by market cap. And I was thinking about showing how if you weight your smart contract tokens by market cap, how would they have performed historically? If you weight, say, your privacy coin portfolio, how would that have performed historically? On things like that, and then just going through, and then also there's the peer-to-peer coins that think they're going to become the world currency through peer-to-peer. A couple of these, right, would be Bitcoin Cash, BCH. I do not currently hold that, but again, it tends to perform well when Bitcoin performs well, but I don't really anticipate it staying in the top 10 during the extent of this market cycle. And there's also other coins that want to be peer-to-peer, like Nano, and I mean, I've covered Nano on the channel, and maybe I'll cover it again, but one of the things you have to consider with these coins is, there's a lot of risk associated with them, because at the end of the day, I do believe that the next, the actual peer-to-peer currency will be a stable coin. I don't think we're going to see, a coin that, like who wants to go out and spend their cryptocurrency on groceries when they think the crypto might be worth twice as much tomorrow? This just isn't. It doesn't encourage spending, as I've said before. So you have that uphill battle. So you would need to see significantly reduced volatility there, and clearly we're not anywhere close to that. I did perform an analysis to project when Bitcoin volatility would reduce to like 1%, and it would take it another like 20 to 25 years for annual Bitcoin volatility to be on average around, say, 1% per year. So I do think that stable coins are more likely, but that doesn't mean you can't speculate on other coins, because when the time comes, when there's a speculative bubble and people are seeing the trading fees associated with Bitcoin. I mean, if you send like, say, $50,000 and it's costing you $100 or something to send it, or something ridiculous, then you can push those narratives with these other peer-to-peer currencies and say, oh, look at this one, it has, the fees are nothing, or the fees are very low. In that situation, people might buy into that narrative like they did last time, and I mean, there's still a chance, I guess, that they work out, but regardless of whether they work out in the long term, there could be some upside in terms of people speculating, like they did last time when the fees on Bitcoin just started skyrocketing. So this is one thing to consider in terms of, say, peer-to-peer. A clearly I don't think Bitcoin is our future peer-to-peer. I mean, it just doesn't make sense that it would be. It's just more your store of value, your digital gold. So someone said, what are your favorite coins you hold and DCA into? So the primary ones are Bitcoin, Ethereum, Chainlink, and Cardano. And then there's a few others that I'll probably talk about in the coming weeks. Someone said, what's your position on investing in precious metals? So Arrowin said, what's your position on investing in precious metals like gold or silver? Platinum and palladium are getting really scarce in the thousands. I mean, I do hold some precious metals, but they're not really a significant percentage of my portfolio for a lot of different reasons that I'm not going to get into now. Maybe I'll make a video on it, but they're not a significant part of my portfolio. I primarily purchase, the biggest, I purchase index funds a lot, and they've been performing very well recently since March. And I do have a risk metric for that on the premium list, but then crypto, and then a few other things, and we'll talk about these. I've made a few videos. I even made a video on Tesla a while back, maybe even a couple videos on Tesla. We made a video on oil, so there's also commodities that we'll be talking about. But again, with commodities, it's different. If you're going to purchase oil, you can't just purchase it at spot price. You can buy like for oils, you would typically get it through a futures contract. But the issue with doing that is that at the end of the month, the roll from like the contract of the current month to the next month's contract, that can kill your profits, because you don't want to take delivery on the oil. So you have to roll it over, and because a month ago the price of oil crashed because everyone was rolling over their contract because they didn't want to take delivery. They didn't have tankers. They weren't renting out tankers to store the oil, so they had to roll it over. But there was no one buying. Normally you have these industries that just swoop in and purchase the oil because they need it to run. But then again, who's going to buy oil when the entire world economy is shut down? So because of that, people said, okay, well, I can't take delivery, so I guess I'm going to have to pay to get rid of, so that I don't have to take it. So this is what happened, and this is why the prices went negative. So we've also talked about commodities as well, and we'll talk about that again on the channel too. Someone said, why nobody is talking about, so Sayla, why nobody is talking about the possibility of breaking off the stock to flow model. So I actually don't agree with that model. I think it predicts that we'll basically go to $100,000 in 2021. I don't agree with that. I think that there's a lengthening cycle effect, and I think it'll become obvious as the years go on. But again, that's just my own personal opinion. And I admit that I could be wrong. I really don't know. I don't think that it's as valid as a lot of people would have you believe. And it certainly looks nice, but you can imagine cases where it simply wouldn't work. Imagine, for instance, let's suppose that you had the stock to flow model, but let's suppose that when Bitcoin launched, instead of having a halving every 4 years or so, maybe it reduced by 99% every 4 years. Well, if this is the case, then really only the people that got in really early on would have benefited, because if it's reducing 99% every 4 years, the scarcity is certainly dropping like a rock over time. But it's going to be hard to bring new people to the table when they recognize that, that after a couple halvings, that those people that were mining were just getting like orders of magnitude more Bitcoin. And then the reverse is true. What happens if it were only like, say, like a 1% drop every 4 years or so? Well, then it just doesn't generate as much interest either, because the people who get in early on aren't benefiting as much. So, I think what happened was it's kind of in a sweet spot right now where you can fit the stock to flow, or you can fit that model and say, okay, this tends to perform well, and it looks nice, but at the same time, I think we are going to move away from it. And I think even the guy himself even made a new model that removes time from it, as opposed to saying time, because even, whatever he says is, say, 2021, we're going to see a new peak. Whatever I say, 2023, neither of us actually know when the next peak is. So, I mean, we're both just creating our own models. Clearly, I disagree with his, and then, of course, he would disagree with mine because I'm projecting a peak later on, like in 2023. But we'll see what happens. I mean, we'll see what happens in the coming years. By 2023, I think it'll be safe to say, by 2022, I think it'll be safe to say which model is looking more valid. I mean, we're either going to be at $100,000 by the end of 2021, or we're not. So, we'll see at that time what's going on. Someone said, so Matthew Marino said, considering Cardano. Oh wait, I just lost the question. So I saw a question from Matthew, but I think he said something along the lines of, oh, here it is. Considering Cardano is just being fully released, is risk technical analysis on past performance still relevant? I think it is. I mean, because people are still projecting that all of this would happen. In terms of ultimately the release of Shelley, I think the fact that the incentivized testnet did so well is also has been really good for Cardano, and the fact that Bitcoin is doing well, it was like the perfect storm for Cardano. But think about it. I mean, if the price keeps going up, when Shelley does launch, you might actually see a sell-off at that point. So you have to keep things in perspective. We still have a long way to go with Cardano. So Tyler Smith says, what events data would lead you to consider the flippening to be possible, meaning the total value of Ether exceeds the value of Bitcoin? So I really don't think that's going to happen in this market cycle. I think that the market, the ratio of Ethereum to Bitcoin would have to go to like 0.38 or 0.4 or something, right, to overtake Bitcoin. I can't remember exactly, but it's something like that. And for that to happen, I really don't see that happening, especially this market cycle. So if that were to ever happen, I feel like it would be so far off in the future that I couldn't really predict when it would happen. But I certainly think that during this market cycle, especially, and probably even during the next one too, that Bitcoin will still be king. I don't see it getting overtaken by anything. And the reason for that is not because, the reason why I think it'll still be king isn't because they're gonna come up with better, they're gonna fix whatever things that people think that need fixing, like maybe increasing the block time. They're not going to do that anyways. But it's just the most trusted blockchain. A lot of people, the cold hard truth is that 90%, maybe even 99% of people really don't care about what the latest and greatest tech developments are. They really don't care. And most of these people don't even understand them anyways. Even if they did care, they wouldn't really understand it. And so because investors don't really care, who cares if you have 2,000 different cryptocurrencies launching their own mainnet where you can have proof of stake when no one wants to build on it? People need to want to use it. Otherwise, it's essentially worthless. So again, Ethereum is great because it has the smart contracts and people are building on Ethereum like crazy. And then Cardano is my hedge. But again, Bitcoin has been around the longest. It has name recognition, brand recognition. People know what Bitcoin is, and it's number one, and it's been number one for 11 years. So I don't see the flippening or anything like that happening. Someone said, do you think XLM is going to replace the dollar? No, I do not. Someone said, do you hold assets on exchanges or in offline wallets? Right now, everything is in an offline wallet. except for maybe like a really small amount that would be set at the. I have like a little bit on a couple of exchanges that are set to sell to start to sell. I mean, I don't actually have the sell set, but I do have a small amount to sell in the event that price spikes up to the 0.5 to 0.6 risk band. But it's not a lot in terms of the overall amount of crypto that I have. Most of it is offline. Someone said, do you trade on a decentralized exchange? So actually, the primary decentralized exchange that I use is Uniswap. I like using Uniswap. Let's see some other questions. So some of them are pretty repetitive based on what I've already answered, so I'm not going to go through those. So someone was asking about DCAing, selling Bitcoin based on the risk metric. So what I do, and I've explained this a few times on some of the videos, but I understand that I publish a lot and you can't watch everything. So in terms of DCAing your sell, so if you are on the premium list, and you are curious about how you DCA your sales, or if you're not even on the premium list and you have your own risk metric that you're using, one of the things you can do is, let's say the risk gets into the risk band that you want to sell at, and let's say it's between 0.5 and 0.6. You could just set a sell at 0.5. You could do that. I don't typically do that. What I usually do is as I wait for the risk to get around 0.52 or so, and then I'll essentially just put a stop loss at the price corresponding to 0.5. So this ensures I take profits in that risk band, but also if the price keeps moving up monotonically, then if the risk goes to say 0.54, then I'll move my sell from 0.52 risk or say from 0.5 to 0.52. So this way I continue to maximize where I sell in each risk band, if that makes sense. So Mohammed said, if we capitulate, how low do you think we can go realistically? So I think the 300-week moving average is likely our dead bottom. The 100-week moving average was more or less where we went to during the first market cycle. The 200-week moving average is where we went to during the second. And then the third one, we had a capitulation down to the 300-week at around 3,800. It's probably getting close to around 4,000 now. So I would imagine that 4,000 would probably be our absolute bottom. But again, this is not financial advice. I don't ultimately know where the bottom would be. I think more than likely, the 6,000, so around the 200-week moving average, would be probabilistically wise, it would be the bottom. So like $6,000. But there's a small chance that maybe we go back down to the 300-week, which would be another which would be another $2,000 drop from the 200-week, or approximately speaking. So what else do we have? Sorry, I'm just reading some of the questions. Let's see. I probably missed some of them, so. Thoughts on decentralized finance. So Nathan Jansen said thoughts on DeFi. So I think with decentralized finance, I actually have a few thoughts on it. I think one of the things that we're likely going to see with decentralized, I think there's going to be a lot of interest in it during this market cycle. I also think that it's going to contribute to the bear market in say 2024. And the reason is because what I think might happen is, you without the need for, say, a centralized party to get a loan, there's really nothing stopping you from just using DeFi to go get yourself a loan. And if we're in a bull market, you can imagine that a lot of people might think, oh, well, if prices are just going up, why don't I go borrow? Why don't I put up some of my crypto as collateral, and then borrow, and then I invest. I get some stable. Maybe I get DAI, and then I go invest that, and then that goes up, and then I ultimately can then keep what my collateral was, and then I can also keep what the ROI on that investment. The issue is that, again, that might work for some people, but other people might, they're going to get over leveraged. They're probably, they're going to get liquidated because the value is going to go down. So then their collateral is going to get taken from them. And so I think this could help. I think while it might take the bull market, the speculative bubble, higher than where it otherwise would go, in the same time, I think it could also lead to, a lot of people losing a lot of money in the short term because they just don't understand. There's a reason in the real world why there is a centralized party. It's basically one of the reasons obviously is to protect the banks. You don't want to lend money out to people that can't pay it back. But also it works in a sense of it protects people from themselves. But I don't think you really should protect people from themselves. I think people should be responsible for their own decisions. So I'm a supporter of decentralized finance, but I just think there's going to be a lot of people that don't really use it appropriately, and because of that, it's going to have some pretty nasty effects to people who aren't responsible with it. So someone said, I'm ready to get in. Is now a good time? Where do we find the risk metric? So you can find the risk metrics. There are a lot of videos on the public channel. If you just go to my YouTube homepage and just type in like risk, you do a search for risk, you'll see a lot of different videos pop up. So I would just recommend like going through all of them if you have the time for it. And then just like learning about it, and again, if you want to follow the risk metric I have, you can do that at my website. Again, it's into the cryptoverse.com, and I'll just put it in the side tab again, and you'll get the risk metric. You can get it live on the Google Sheets document. It's like a dashboard. And then you also get the premium video each week, and then the premium report each week. And by the way, as we go through this market cycle, I'm probably going to publish fewer public videos and more premium videos. And the reason for this, logically speaking, it makes sense because, when we're in 2023, like imagine a future scenario where we're in 2023, Bitcoin's $150,000, okay? And there's a ton of people coming into the market, people aren't going to want to hear me preaching about, oh, Bitcoin's about to crash. They're going to say, oh no, this is the dumb money talking. They're going to say, oh no, it's going to $1 million. It's going to $5 million. At that point, I would rather focus on making the content for the people that have been following the market cycle for a long time. They're on the premium list. They've been there from the beginning. They've already seen like 30 to 40x ROI on Bitcoin potentially. And they understand that the risk at getting in at that point is very high, and that you would probably want to start moving out of the market. So a lot of the people coming into the market in 2023 they're not going to want to hear most likely what I have to say. So I'm not saying I won't publish public videos then. I'm just saying that I'm not going to publish daily public videos in 2023. Most likely just because I'm going to focus on getting the information to the people that I would consider, say, the smart money, and we're getting into the market at the right time. It's really hard to help dumb money, because even if you tell them in 2023 the market's going down, they basically what they do, right, is they just downvote you and move on. They don't really focus too much more other than that, and they just go on to the next person who tells them that the price is just going to go up and up. So someone said these cryptos need some actual use cases. Yeah, I mean, I agree. This is why it's ridiculous to just like throw a dart at like CoinMarketCap's page and just pick a random coin. Pick the coins you think that are going to be here, because I think 99.9% of cryptocurrencies are going to die. Over the next 10 to 20 years, maybe even before that. So pick the ones you really believe in, that you can stand by. Even if they do fail, you can say, well, you know what, I took a calculated risk and it didn't work out. This is just life. It's investing. That's just the way it goes. But if you say just randomly pick 20 different coins that are in the 3,000s in terms of their rank and market cap, and then you lose all your money there, how are you gonna? It's harder to justify. I'm not saying you can't hold a micro cap. I mean, I actually do hold a couple, but I'm just saying that you really shouldn't put a lot of money into these coins, because there's an opportunity cost, right, on having those over having them in, say, Bitcoin or Ethereum or other coins that are actually more likely to do well. So someone said, how often is pricing on the risk metric adjusted? So I update it to the Google Sheets every week, and it only changes in the third decimal. So I mean, like if the risk is 0.493, and the next week I change it and maybe it changes to like 0.494. So I mean, it just changes in the third decimal weekly. So I usually only have it showing 2 decimals anyway. So you really won't even notice a difference in it, because it's such a slow change, a gradual change over months and months, that you hardly even notice the change. But then when you look at it over a long period of time, it really does change significantly when you look at it over years. Someone said, how did you learn technical analysis? A lot of the stuff that I do, actually, that I show on the channel is not your traditional technical analysis. I mean, I could show you guys, I could talk more about like the RSI or Fibonacci level. I mean, I could go through, a lot of these different types of TA. But I think the market, the YouTube market, is fairly saturated with that type of analysis, and there's really no point for me to show it. I'm trying to kind of pave my own path here and show more data science stuff, and I learned that when I was getting my PhD in engineering. Alright guys, I think I'm gonna probably wrap it up. Remember, if you want to check out my website for the premium list, then check that out. I'll put it in the sidebar one last time. You can join that. If you want to check out the Telegram group, you can do that as well. I'll go ahead and add that into the side chat as well, so you can find me in the public chat. So I would love to have you join. But I think we are going to go ahead and wrap up the video, call it a night. It's getting pretty late here. So I hope you guys enjoyed it. I hope it's been useful to you. And we'll continue to make videos, obviously, as we continue on, daily probably. But again, go ahead and like the video, share it, and then subscribe to the channel if you haven't yet. Would love to have you here. So that'll wrap it up, guys. I'll see you next time. Bye.